Consumer sentiment is actually lower today than it was at a very, very crucial point in the stock market and economy. I'll explain that and why coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so consumer sentiment, as monitored by the University of Michigan, is really established to kind of test or get a litmus test of the mood of the consumer, okay? And when that reading is high, you'd expect that the economy is working well, stock markets are probably surging or moving in the right direction as well. If that reading is low or it's trending lower, you'd expect economic conditions to be difficult for the consumer and likely the stock market following suit as well, the stock market not doing as well. Guys, take a look at this. The consumer sentiment right now is lower today than it was at the bottom of the pandemic. March of 2020, consumer sentiment is lower today than it was when we shut the economy down. How is that possible? And when you overlay that, as I've done with this chart from the Federal Reserve Bank of St. Louis, when you overlay that with the stock market performance, we are completely detached. The average consumer has a mood, has a feeling that is completely detached from the experience, the surging of the S&P 500. Now, guys, we are just about at a record, okay? So at the time I'm recording this a little bit in advance before it airs, you know, the S&P 500 is what? It had 19 straight positive days, and we could be hitting a record here for most all-time highs in any given year. A lot of that coming, this surge coming in the second half of the year. And yet that's coming at a time where the consumer sentiment is absolutely deteriorating. So consumer sentiment, if you're not very familiar with it, it's really designed to gauge how consumers are doing or how they're feeling in three areas, okay? Number one, how they're feeling about their own financial situation, okay? So during this survey, hey, how are you feeling about your own financial situation? But then second, just your general feeling on the short term of the economy. And third, your kind of feelings on the long-term general economy. So this survey is designed to just check with consumers to see how are you feeling in those three areas. And honestly, a reading above 80, right? So somewhere in 90, maybe 100, something like that, you'd say, okay, this is really good. Consumer sentiment is strong, all right? But a reading below 80, or a trend that's going down, you would say consumer sentiment is deteriorating or consumer sentiment is low. Take a look at this chart over the long term. Obviously, consumer sentiment drops significantly during those gray shaded periods, which are recessions, right? And because this data comes out a few months after it was originally collected, similar to recessions and so on, you can only tell sort of in the future, okay, were we in a recession back then? It's sort of, you know, this is a good overlay, all right, between recessions and these readings. And so you can look and say, well, when that sentiment is above 80, you know, 90, 100, obviously 110 back in the 2000s, I mean, or late 90s, consumer sentiment was strong. The S&P 500, if you recall at those moments, really strong. When sentiment is going down or trending down, normally the stock market isn't doing so well. Now, I would point out the time period after the tech bubble, but before the great financial crisis. That was obviously just a few short years between these two seismic economic events. And notice that consumer sentiment came back after the tech bubble, but it never really got really strong, right? And it started deteriorating far before we had the great financial crisis. And I wonder if that had to do with sort of this melt up in real estate and some of the challenges there, because the average consumer is looking and saying, well, you know, what's affordable to me and housing affordable, that sort of thing. So how could this be right now? How could there be such a detachment, such a extreme gap between how the stock market's moving and how consumer sentiment is moving as well, how consumers are feeling? Well, because of that lag I mentioned, it's very possible we've seen this surge in the stock market over the past month, 6 weeks or something like that. It's possible as the readings actually come in, we'll see consumer sentiment starting to come back after falling off in the summer. I hope so. Possibly not, though. To me, I think this is more so a reflection of how the consumer is feeling about inflation, right? And about the labor shortages. The average person at work is having to do more than what they've normally been doing because demand is high and because there are labor shortages. Plus, the conditions for doing that work are a little bit more challenging than they used to be, i.e. COVID, right? Or supply chain issues. And then on top of that, at home, we're facing higher prices, right? It's harder to buy a house because prices have absolutely surged. Yes, interest rates are still low, so the mortgage is affordable, but the amount that you're having to pay to buy a house, or maybe the stress that you're feeling, obviously that's going to wear on your sentiment, your feelings. Terrible time to buy a vehicle. There's shortages everywhere. Prices are through the roof. And so between houses and vehicles, terrible feelings, right, as a consumer. And then when you add in prices at the pump and overall prices at the grocery store, other expenses, this is a very, very challenging time for consumers. All right, so if that sort of explains why consumer sentiment has been dragging, what about the stock market surging? It's possible company buybacks. So it's possible that's pushing the stock market higher. Speculation, of course, what the Fed has been doing, keeping things very, very loose, have allowed a lot more speculation and a lot more greed in the market as opposed to fear. And then in addition, we've still got record high margin accounts. More people are borrowing money to invest than ever before, and I think those things are helping to fuel the stock market to rise, even though consumer sentiment has been dragging. So what's this mean to you? Let me go back to that first question. I said the consumer sentiment is actually monitoring 3 different things. How are you feeling about your overall finances? How do you feel about the short-term economy and long-term economy? So here's my question to you. How are you feeling about your finances? Are you using the right lens? To me, this data, if it doesn't bounce back and the trend doesn't continue, I think the further that the stock market and the consumer sentiment are detached, it's probably a negative sign for the overall stock market, okay? So you've got to be aware of that. However, what's your reading on your financial situation? Are you making progress in your financial life? Are you prepared for any financial risks or health risks or emergencies that could come up? Are you capitalizing on opportunities? Are you doing what you're supposed to be doing to reach your financial goals? That's what I care about for you. Work with your CFP. Make sure that your overall financial sentiment is strong. And if it's not, work with your CFP to say, well, where are the areas, what are the reasons why your own sentiment of your financial situation is lower than it should be, and have them help come up with creative ways to get you back on track. Okay, so work with your CFP on your specific financial consumer confidence. If you don't have a CFP that can help you with that, you can always contact one on my team. You can find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.